While everyone is investing into tech stocks, there is another booming industry out there, and in this video we're going to go ahead and break it down. Welcome to another video. My name is Oleg, and today we're talking about the great outdoor companies. More and more people are making their peace with the fact that we're not going to go back to normal for at least a couple of years, even if the virus subsides. With 9 months in quarantine, a lot of people are switching their interests around and trying to do more outdoor activities that don't involve as many people around them. By dedicating over 24 hours to do my research of companies involving boating, golf, recreational vehicles, and camping, I came up with some interesting facts. By looking at the company's financials, doing their technical analysis, and recent news, we're going to answer the questions like what companies show the most potential, which ones take a lead in their industry, and which sector we should be closely monitoring. Let's go ahead and get started. First industry that we are going to discuss is going to be boats. And I'm not talking about Royal Caribbean or Carnival cruise lines. We're going to focus our attention on two winners that I found, which is Malibu Boats and MarineMax. Malibu Boats, with the ticker symbol MBUU, is a designer and manufacturer of the recreational power boats. They supply them under Malibu, Axis, Cobalt, and Pursuit boats. It has an international market presence with an independent dealer ties in United States, Europe, Asia, Africa, South America, and even Australia. MarineMax, with the ticker symbol HZO, is a recreational boat and yacht manufacturing company, dealing in sports boats, ski and jet boats. It also sells a variety of boat accessories such as marine electronics, water sports accessories, and novelty items. Let's look at their financials. Both of the companies are in the same niche, both took a hit at the beginning of this year, but were able to turn things around and be in the green for the year. MBUU is trading 60% year-to-date higher, and HZO is trading 51% higher year-to-date. Both of the companies do not offer dividends and fall in the category of a low cap stock. Recommendation rating for MBUU is a 2, with 1 being a strong buy and 5 being a sell. HZO has almost identical recommendation rating at 2.1, with the 1-year target being at $31.39 per share, which is 26% higher than the current price. So how do these companies adjust to the current rising demand? MBUU launched a new towboat with a target customer base of large families. This should help the company benefit from the changing industry trend. HZO also has a line of new products that they're currently updating, but their main strength is their strong balance sheet. As of June 30th, HZO has a cash equivalent in excess of $180 million, which can help sustain its business operations in the fourth quarter. Both of the companies are very competitive, and in athletic and recreation industry, MarineMax is taking 12th place out of the 32 companies, while MBUU is ranked number 8 out of 32 companies. Next on our list is going to be golf industry stocks. Number 1 company that I chose in this industry has the market cap of $1.8 billion, which makes it a small cap stock, and it's a Callaway golf company with the ticker symbol ELY. ELY is trading around 15% lower year to date, with a 1-year target at $23.20 per share, which is around 30% higher than the current trading price. 1-year graph has shown us that the company was able to successfully recover almost 70% of the stock price that it lost during the beginning of the year, and is adapting to the new business model. Over the past couple of years, Callaway Golf Company ended up investing a lot of money in artificial intelligence and machine learning to aid golf club design. But most importantly, this company owns 14% of the millennial favorite, party-themed golf range Topgolf, which is laying plans for IPO in 2020 at a $4 billion valuation. With a PE ratio of 26 versus the leisure product industry average PE ratio of 140, and considering all the right moves Callaway is making, this small cap company looks undervalued and could be a great stock to pick up this and next year. Make sure to stay tuned for the entire video because the most profitable companies are still ahead of us. Now we're going to go ahead and talk about our third industry, which represents recreational vehicles. The stock that I picked for this industry is Lippert Component Industries with the ticker symbol LCII. It makes components for the recreational vehicles and other original equipment manufacturers. Some of the components that the company is manufacturing include windows, doors, chassis, furniture, and slide-out walls for the travel trailers and the fifth wheel RVs and others. RVs have been around for a while now, and I would prefer to invest into the company that has established its place in the marketplace, that has a network of suppliers, and that has products that it's ready to deliver if the demand goes higher. LCII is trading at the price of $105.91 a share, and this is the first mid-sized company that we're discussing in this video. Their year-to-date price is 40% lower during the beginning of the pandemic and 29% higher just a few months ago. They're currently trading at the same level that they were at the beginning of 2020. One of the reasons why I chose this company is because they pay 2.78% dividends, and if you look at the quarterly earning reports, They exceeded their expectations last 3 out of 4 quarters, and upcoming earnings are expected to be even higher. The company is rated to be at a fair value, and performance outlook is green on the long run. Moving to our last industry, which is going to be camping, we are going to go ahead and single out one company, which is Camping World. We'll see whether it's beneficial to invest into the company that had jumped 580% ever since its March price. Camping World Holdings is an American corporation specialized in selling recreational vehicles, recreational vehicle parts, and recreational vehicle service. They also sell supplies for camping, and their headquarters are located in Lincolnshire, Illinois. Jim Cramer says that the pandemic has given this industry a long-term boost, but the Wall Street would have to realize the recession is going to take a little bit longer than expected, and the stocks might pull back a little bit more. This is exactly what we can see on the year-to-date graph for the CWH. The stock pays 1.28% in dividends, and its second quarter for 2020 earnings report blew expectations out of the water. As the seasons are changing, there might be a fluctuation in the amount of people that are camping out, and that is why it is important to have their robust portfolio of revenue streams. During their last investor conference phone call, they ended up releasing their long-term goals, and these are the most important ones. The company plans to launch a new peer-to-peer RV rental marketplace in the spring of 2021. At around the same time, company plans to launch a mobile service marketplace to allow the members to schedule service appointments and request immediate support from different repair centers all around the country. Lastly, the company is investing into products development that continues to create more efficient, more responsive, lightweight, tech-savvy products for both RVs and products that complement them. There can be an argument made that this company is actually on the overbought side, and I would personally prefer to invest into this if it starts making new higher lows and higher highs. On the long term, it's going to be very beneficial, and that is something that I'm looking forward to doing. I hope you were able to find value in this video, and if you did, you know how to support the channel. I would greatly appreciate that, and I will see you in the next one.